Houston and Texas is so sophisticated when it comes to multifamily and real estate investors, but Wyoming, much less sophistication, much less people doing this.
Welcome to the Ideal Investor Show. This is the podcast where we help you challenge your mindset and discover where you are. Let's go. Hello and welcome to another episode of the Ideal Investor Show, where we try to bring you great guests, great content, and great information so that you can make informed real estate investing decisions. And also sometimes stuff that has to do with investing in general, generating passive income, getting to early retirement, all this good stuff. And today we have one of those experts with a really, really diverse background. And that's Casey Gregersen. And Casey, I would say welcome to the show.
Well, thanks for having me. I'm excited. It's an awesome show and I like what you're doing. So excited to bring some value today, hopefully.
Yeah, absolutely. And we're very aligned because I know that you started at least or did for some time what we are still doing, and then you getting bigger and evolving from there. So I can see future collaboration happening here. So that would be nice. Before we dive into that, tell the audience a little bit, how did Casey get to where he is in real estate investing?
You bet. Yeah. So I'm now a full-time real estate investor as of the last about 2 years ago. I left my W-2. For many years, I started out as a petroleum engineer, and I think it really helped set me up because I had a strong W-2 income. I always tell people this. I had the blessing of, as engineers, when I was work for Shell Oil Company. So when we all come in, they would put us in the field for usually it's just for like a year, and we would go to the field and you'd work a 2 weeks on and then a 2 week off like rotation, right? So when I was off for 2 weeks, I didn't have to do anything regarding work, right? I didn't even have to open my laptop or my cell phone. So that's what allowed me to start investing in real estate, right? I first was just I actually bought my dad helped me co-sign on my first property when I was going to college, right? But then I really started getting active once I got into my W-2 job, and I was fixing and flipping houses, finding rentals, and really able to grow in real estate because I had that luxury of that job where I had the W-2 income and I was able to still have 2 weeks off. I had half the year I didn't even have to work, so I could half real estate, half W-2.
Yeah, that's really awesome. Did you ever go on platforms, or were you always on firm or solid?
Yes. So I was a combination of a little bit of both at the very end of my career.
Okay.
So early on, I was always on like onshore US based,
Yeah.
whether it's in West Texas, spent a lot of time there, a little bit in South Texas, and then actually spent some time up in Alberta, Canada. But then at the very end of my career, I had some opportunities to go offshore in the Gulf of Mexico, which is really cool. I like selfishly loved doing it the first couple times, but that was one of the big things one of the big catalysts that led me to leaving my W-2 was I had more kids by then. I think I had 3 kids at the time, and being away from them on the offshore platform, it was a lot easier when I just had one and I was going to West Texas, but being gone for 3 to 4 weeks and sometimes indefinite, that was actually one of the biggest catalysts to where I ended up being like, you know what, I'm going to do real estate full time because I don't want to miss these like core memories of my young kids.
Yeah, that's actually one of the things I've always been curious about and never had a guest to be able to ask that. If there is kind of like bad weather coming, are they evacuating, or are they actually rather keep people there to make sure everything is secure and stuff like that? Which direction does that go?
Both, right? If it's really bad, like they know hurricanes are coming, they'll get almost everybody out of there. But if it's just going to be like just not great, then this is kind of the bummer. You're planning to go out on this day, like your hitch ends, and when I was working on land, every other Tuesday we changed out, and
Right.
like as long as your flight wasn't delayed, you were home, right? Or a lot of times you just drove home for a lot of people. But out there, you were on the platform, and if the weather wasn't great, they just didn't fly helicopters that day, so you'd be stuck, and you could get stuck out there for weeks, right? And there's not that many helicopter flights. So if you miss it one week, you might be stuck out there for another week. So it's
Yeah,
definitely
absolutely. See,
unpredictable.
that's what I kind of, yeah, exactly. That's what I suspected because I mean, um, most people in our audience know that I was in the Air Force for a long time, but I was always flying jets, so you needed a runway or at least an aircraft carrier to land on. But I know because I grew up in northern Germany, and they also have oil platforms out in the North Sea. And they have two supply options. They have kind of ships that can supply, and then they have helicopters. But in some cases, when you have bad weather, then the ship can't really get tied to the platform, and the wind is so strong that you can't fly the helicopter. And people don't like to rappel up and down the helicopters. They typically like to walk in if at all
Yeah.
possible. Yeah, so that was always a curiosity for me how that works, and I can totally understand that it's maybe not ideal for family life. I mean, I used to, when I was doing the main work as a consultant, always like to travel, but try to get back home and on the weekend, so when we're going back to the real estate stuff, tell the audience a little bit, what kind of real estate are you actually into? Is it commercial? Is it office buildings? Is it residential? Is it, what is it?
Yeah, right. So I was in the field back then, and the other thing I didn't share with you is like when you're traveling to the field, there's a lot of windshield time, right? So that during that windshield time, that's when I started reading books. Like a lot of people read Rich Dad Poor Dad. That was kind of the catalyst that really got it going. And then started just consuming books and podcasts, and that's when I was starting to learn about guys doing single family, doing multifamily. And
Right.
originally, I was just buying single family properties in Wyoming. So and I moved around a little bit while I was working in the field because back to that year assignment, we usually have a year out there. I stretched it out for like 7, 8 years in the field because I was like, I'm not going back to the office. I'm making the same amount of money and I have half the amount a year and I could start
Right.
building my real estate. Right.
Right. Absolutely. By the way, Wyoming to me similar to the Dakotas on first glance, and I'm not claiming to be an expert in those particular states, but it seems to me that success from an investment perspective on residential real estate would be quite dependent on the industry that is booming. Would you agree with that?
Yeah, you know what? It's been fascinating over the years in Wyoming. So I've been investing in it since 2010. And what I always say is like 2010 was like a flat line in Wyoming
Mm.
that didn't even like it wasn't like everywhere else in the country where it was like terrible, right? It was literally like a blip, a flat line, and then it kept going. And it's always been kind of slow and steady. And even over the last couple of years, we've gotten a lot of appreciation because of people, for instance, COVID, people wanting to get out of the
Yeah.
different out of California and New York and come out there. So it's been really fascinating because oil and gas is a lot of people would think Wyoming is driven heavily by that. But again, there's so many other like minerals and other resources in Wyoming, and it's so like sparsely populated that it's still continued to go, right? It's been really interesting, like because yeah, I mean, I was talking to a lot of banks, a lot of bigger investors in Wyoming probably 2 to 3 years ago when oil was going negative and right, and there was all this scarcity, and we're like, well, what's going to happen? Is it going to decline? But it didn't. I mean, it all that I think what kind of replaced it was there was still enough other industry in Wyoming that were still thriving, and then the fact that people were wanting to get into the open space. So literally, it actually appreciated during those times, and now I'm actually pretty optimistic with the change in the White House. Like if they start if more companies start drilling and doing more in oil and gas, like it could be back, it could be like doubly powerful, right? Because it was really before maybe without as many people moving in, and now you got people moving in. Now you got oil and gas, but regardless, it's just always been slow and predictable. And the other thing I like is like taxes are super low, so there's no state income tax, and property taxes are low, and that's honestly why. So I'll quickly tell you this: I had a small portfolio in Dallas Fort Worth. And I was comparing my numbers of like my rental portfolio and my cash flow, and I was comparing that against Wyoming, and you guys will love this if you guys do turnkey. The cash flow in Texas was basically breaking even by the time I paid property
Right.
management, right? But my Wyoming stuff was making like several $1,000s a month in cash flow, and it was purely based on what I was having to pay in property taxes. And then the other thing for the last couple of years is insurance. Everybody else has got hammered in the South, but in places like Wyoming, we saw a little increase, but nothing crazy. Yeah.
Yeah, I have a part of my portfolio is in Idaho, a little bit in Illinois, and then more of it in Ohio. And the other of our clients have properties in other kind of, if you take it a little generously, Midwestern states, and a little bit towards the south. And yeah, if those criteria are there, and that's what I meant before we even hit recording, right? Like it's a matter of what are the criteria that we want to meet from like at least day one, little bit of positive cash flow, even on a leveraged deal, and then grow from there. And I think it's understandable if a state like Texas says, okay, we have no sales tax, no income tax, the money has to come from somewhere, right? Like, I mean, it can't
Yep.
just materialize out of nothing.
Yeah.
But I also wanted to ask, or had asked that question because there's obviously a difference between having 30 million people in a state or like 1 million or not even 1 million, right?
Yeah, and that's really it, right? Is and people are always dumbfounded, or they're like, how do you not have state income tax and low property taxes? But yeah, it's a population thing, and it's been natural resources. There's been so much royalties and oil and gas and coal, and now like there's like nuclear power. Like we just bought a 45 unit multifamily in Evanston, Wyoming, which is it's like right on the border, close to like Utah. So you get a lot of people from like Park City and Salt Lake City that are want to go live in Wyoming for like a fraction of the price, right? And now they've got all these jobs coming in, so it's created a ton of demand. Yeah, it's just like there's just not enough. Okay, let me just explain this too, like and why I've done a lot more. And because again, I had the stuff in Texas, I diversified there, invested in Wyoming because of cash flow, but I just the other thing was like the market potential because I looked at what happened in Colorado and the Front Range north of Denver. I looked at what was happening in Salt Lake in Utah. I looked at what is happening in Montana, and that's probably been probably the third one to grow and like is
Yeah.
been growing rapidly. And Wyoming's still pretty sparsely populated, but it's the same scenery. It's the same like the same things that people love about those markets is in Wyoming. So yeah, I'm actually really excited to continue to grow there because I feel like it's got yeah, it's just poised to grow. And there's not a lot of competition, which is the other thing I haven't mentioned is
Yeah, that's
when I'm
really cool.
investing in Houston. Go ahead.
Yeah. One quick other thing I wanted to at least ask you about, because it sounded like it, but I really like for the audience to get confirmation from you, being the expert. You mentioned that some people, especially through COVID and for other reasons, like you just mentioned Utah, seem to want to go where they can for a reasonable price own a property. Um, if I looked at your case studies on your website, renovated properties for a reasonable price with land around it and stuff like that. So can you give a little bit of a description of how much is people wanting to like own a property versus from a like purely investing perspective, people like you and me who would buy a property, hold a property, and then put tenants in?
Yeah, you bet. So it's still like median house prices. Like we still buy a lot of. I mean, you'd be surprised. We still buy some stuff under 100,000. So
Mm.
sometimes it feels like the Midwest in terms of like you're getting really low price points and you get high cash flow because there's still a lot of rental demand. But you still do see the nicer places. Like there's plenty of really nice places in Wyoming that have grown, and now you're trying to get in it. But again, it's not California or maybe Salt Lake City or Denver, but you're buying houses are up to 500. I mean, they're a wide range, right? But you still
Yeah.
might be trying to buy a single family home, a nice one for 500,000. So what I found is, yeah, if you want to just go be, if you're just looking for a single family home, or maybe you're a fix and flipper, there's a good market because of limited inventory, which another thing I didn't mention is like we found that having in-house contractors has been a complete game changer because what I really believe that why Wyoming hasn't grown quite yet is the lack of contractors, right? They just not enough people building, which has been good for values, right? Values have continued to increase, but there's just not enough contractors in the market. So I feel like if you're fixing and flipping, there's a lot of demand for that. But we're still seeing that we can go buy rentals. For example, the 1% rule, like dividing rent divided by our purchase price. We can still find those deals today.
Yeah, and that's what I was referring to, right? Like in Texas, it's hard to find, especially if you account for the property tax component as well, and not just look at, what is my mortgage and my interest and stuff, but the property tax and is an important component. Now, for those properties in Wyoming that people actually purchase, are they like for permanent residency, or do they use them as a second home, or how would you describe that part?
Yeah, you see a little bit of both. Obviously, depending upon the market. Like, I mean, in Jackson Hole, a lot of people, and even in Sheridan's where I grew up, and it's turned into a lot like that. These places by the mountains, there are a lot of people with second homes. But yeah, I'm just still seeing a lot of job and industry jobs. Another one is Casper's, kind of like the dead center of the state. It's a lot of industries run out of there. And yeah, you just see a lot of people that are working class that are still buying homes there. So you see a wide spectrum from like the more touristy places to actually places where there's just a lot of jobs and it's still very affordable in those areas.
So thank you for describing a little bit what is not very often discussed. I think you're probably the first expert from Wyoming that I ever had on the show. So I'm sure the audience is also very grateful for you coming on. Now, you mentioned before we hit record for the show that you also now have evolved into like syndication kind of deals and stuff like that. Would you tell us a little bit where they are? Are they also in Wyoming? Are they more in Texas? And a little bit about what that opportunity is.
Absolutely. So I built it out over the years while I was still working the W-2 job, right? I built out a fix and flip company to where I was always looking for stuff that needed work. I built out a direct to seller company to just because you got to have deal flow. You got to find the deals, right? So I could now find the deal. I brought in-house contractors actually to do our fix and flips, which I alluded to a second ago, that if you could solve the contractor problem, I feel like you could really make hay in places like Wyoming. And then I also do property management, and I really just I did it organically, right? I was managing it when I had 5 units and when I had 10, and then I started actually hiring virtual assistants to manage that. So as I put together this vertically integrated company, the big bottleneck became capital, right? I could find the deal off market, I could fix it up, and I could rent it out. Well, it's a great system, but it's very capital intensive. So that's
Right.
when a couple years ago, I'm like, you know what, we gotta like I was raising money on one-off deals from a lot of people in my network, a lot of oil and gas people I worked with, or people that I knew in Wyoming that knew me and knew the market. But I needed something to really scale that instead of just doing one-off investments per deal. And we still do those today, right? But the next step was the fund. So I started Bighorn Capital Fund. And what we target there is, for example, that deal I mentioned over in Evanston, Wyoming, by the 45 unit that was right by Salt Lake City. I actually used my fund to raise $1.7 million for that one, which the strategy there is we're buying it, going to fix it up, and then refinance, pay back the investors. So that's one strategy we do. And then we also do some buy and holds where, again, I'm able to really quickly, like right now, I'm closing at the end of the year a small portfolio of deals that we bought over the last 12 to 24 months. We're going to sell them basically turnkey to the fund so the fund can get depreciation, equity, and really cash flow. I think that's the big differentiator in Wyoming is you could still find deals that'll cash flow and you should still get some steady appreciation.
Okay, cool. Yeah, I reserve that last question for a moment. For the syndications, you talk a little bit about the minimums and kind of like the duration for any limited partners who would consider to come in.
You bet. Through my fund, it's a really unique model to where it's called a fund of funds. So I have different offerings underneath my fund, but everyone gets the same K1 from the same company, right? So typically the minimums are 50,000. But the beauty of this is I've got some deals which are just structured as debt, and then I've got some equity ones. And then as far as so like investment minimums typically 50,000, but the thing I'm probably most excited about that I started this year was I just worked with a lot of people who had they were working in oil and gas. Another example, lady, she's going to be sending her kids to college in a couple years, but she's got some capital that she wants to invest it and doesn't want to put it in the stock market. So I created this what we call our Ponderosa continuous offering where they can invest in and get a good fixed return. It's like it's debt, right? That we use it to fix and flip and for buy and holds, but we make it to where they could pull out the money within 90 days. So I think that's typically one a lot of people because there's some people who are looking for like a 5-year hold and a lot of equity and appreciation. And we do those. That's when I build a portfolio of deals. But the other option is if somebody wants to just be able to kind of have some flexibility, we'll just do a fixed debt fund and it's just a continuous offering.
Yeah, that's pretty cool. And I mean, we actually, our approach working with turnkey providers, and then as far as what different offers for our investor clients, basically, we are structuring the 90 days might still be a little too long. One other new thing that we brought in a few years ago is tokenized real estate, because
Oh
then
yeah.
you have basically a marketplace where you can sell individual tokens almost on a daily basis. And the reason we added that as basically an offering is because there's always, and I'm sure you discuss this with your clients too, especially the ones that are not in the syndication, is okay, what do we handle reserves? Right, like if you take your buy and hold turnkey investor property, so somebody with my help or directly comes to you, Casey, and says, "Okay, I want 3 properties. Show me the ones, price range, whatever." So now we buy them. They may or may not already be fixed up, and then we finance them as well, and then you do the property management on them. So now let's say we have a couple $100 just to be conservative in positive cash flow, which includes obviously maintenance, vacancy, and capex in a way on a longer term perspective. What do I do with this money, right? And yes, you could argue in the last few years you get at least, kind of inflation matching interest rate if you put in a savings account. But since you already decided to invest in real estate, you might as well do tokenized real estate. You have it sitting there. It benefits basically at $50 a piece or token. But then if Casey calls and says, "Hey, we need to fix the bathtub for $500, you can just sell 10 tokens and send the money," right? And in the
I love
meantime,
it.
yeah, so 90 days would potentially, if I don't know how you react if you call me and I say, "Yeah, I pay you that repair bill in 90 days when
In
I
90 days. Yep.
can. So,
That's a
maybe
great
not.
concept.
For me, the argument why we looked into this, and that's what I love, why I love to do the podcast, because we can also learn a little bit from each other, was just to say, if I'm convinced and our clients are convinced, your clients are convinced, and you are also, I'm sure, convinced real estate is a good field to invest in. So why would I then have to take my money out of this good field to invest in that I've already determined to build a reserve? What it was
Absolutely.
really only what really needed to be invented by someone is how can I do this on a much smaller scale? And we're obviously also using it for, like you mentioned, parents, where they say, well, I'm looking to put like $100 or $200 a month away for my kids. Can I do that in real estate? Right. And yes, you could do REITs in the past, or you could maybe get some like real estate related ETF or stuff like that. But if you really wanted to be in residential real estate, tokenization is basically the first thing that I know that allows that on that smaller scale, right? So if you do this for the first 18 years of a kid, they have actually a pretty nice little diversified portfolio in tokens by then, right? So now,
Yep.
the one thing I wanted to come back on, because I think this is probably also important, not so much for the syndication, but more for the straight out turnkey deals, is leverage versus cash. How do you handle that? Do you have any kind of relationships for leverage or?
Yeah, absolutely. And that's really how I built my portfolio before I had the fund, right? When I back to having my W-2 job. I mean, the small banks, I built really good relationships because I had a strong W-2
Right.
and then I had all the experience. And that was a perfect blend for me to be able to build my portfolio and keep getting. And I just worked with multiple small banks and I had good mentors early on that are like, go invest your time in these small banks versus the big box banks, right? That don't care who you are. So it's funny. I was just talking to one today, which we ended up selling refinancing, and now I don't actually have a deal with him. And it was one of the first guys I had a great relationship with. And he was like, hey, I definitely want to keep working with you, Casey. I know now is not the right time. But anyway, and that's what's allowed us to grow. And especially when you're fixing and flipping and you're doing cash out refinances and doing the BRRRR strategy where you buy it, rehab it, refinance and repeat and rent it out, right? So doing that, you've got to have good banking relationships. So to kind of answer your question of like where we are at, like we love doing deals where we can get in and buy it if we're buying the property for 70 cents on the dollar, or the fact that we're adding enough value to the property by work we do or renovations to where now we've got 30% equity or say 25, we try to underwrite our deals to where we'll be able to refinance, get our capital back, and it'll still pencil, right? So typically, I think if we're going to be in a long-term buy and hold, we're going to want to be somewhere between 70, I would say 65 to 75% leverage, again, depending upon the
Yeah,
cash flow of
exactly.
that asset.
Yeah, that's what we do. Same thing here. And I mean, that's also a sense assurance that it appraises, right? Like, I mean,
Yeah.
if you buy it right and have a team that does good quality renovations and then put it up, you still make your money back, and that's basically kind of like the right thing. And then have the management also. That's when I'm a guest, I'm in your role, a guest on a podcast, people always ask me what's really the key to success. And I oftentimes feel, and I think you might be a prime example for that, the organizations that we work with need to have all three pillars basically of the business. They have to have the ability to find what I call the ugly duck in a good neighborhood and fix it up with a good team, with good quality renovation for a reasonable price. Then they need to have that marketing, sales, organization kind of component in the middle, and then they need to have the property management component that both caters to the tenants and caters to the investor owners. And if you have that all basically under the guidance of one team, then it makes sense to really talk about passive income, positive cash flow. Because I've been in the beginning when I started, I'm sure you had experience with that too. You buy something from a provider, but they are not managing it, you give it to management, even if the management is good. So now 6 months in, the tenant reports something from the renovation. As the owner, you're always going to be the one who pays for it, even if it's not right, right? Because the people who renovated it, they basically say you bought it as is. Property management says it needs to be fixed. The tenant says, I can't not use my bathtub. Well, where do you go, right? But if you have a good relationship to a proper turnkey provider who says, okay, we are proud of the quality of our renovations, and if anything that we renovated breaks within the first year, it's on us. Well, then it's fair, right? And it's not this,
Yep.
because that, I think personally, maybe I'm talking a little too much about this, but this avoids this whole, lipstick on the pig situation, in my opinion.
Yep.
because if you are the manager of the property that you renovated, and I'm asking you to give me some warranty on your renovation, you wouldn't just do a mediocre thing and then eat all the cost later.
Absolutely. Yeah. Yeah. I mean, we treat it like we're treating ours, right? And when I'm fixing it up for myself or for the fun, we're gonna, yeah. And it's always a balance, right? If we're fixing and flipping, are we doing this to be cost effective on the flip? Or are we doing it for longevity? But I'm with you. If you're doing it planning a long-term hold, it's a different
Well, it's
situation.
also, it's in my opinion, like you said, fix and flip and long-term hold in the context of what are really the clients, right? Like I rather have bedrooms with hardwood floors or LPV or something like that if I know it's a long-term buy and hold for tenants versus it's being fixed and flipped to somebody who wants to actually live there as their second home or even their first home, right? Where you might say, okay, well, let's do a little bit better countertops, let's put some nice carpet and stuff like that. It's just a different audience that you're making it for.
Absolutely.
Yeah, cool. Okay, so what other things should people know if they're interested to get in touch with Casey?
And one other thing I was going to mention, you made me think of a second ago, Axel, is when you were talking about leverage, is what we've done because of rates. I built my portfolio using small banks, but when rates went way up, it made a lot of deals no longer pencil. And rather than just stopping our wholesale company and stopping operations and just hunkering down, what we did is we do a ton of stuff now where we just like again, whenever I talk to a seller, I'm always being like, hey, here's my cash offer, but here's my terms offer, my creative offer. And we actually keep track of this in our company. It looks like over the last year, over almost 2 years now, 90% of our deals we do involve some form of creative finance, we call it, to where maybe the seller owns it free and clear and they're financing it, or sometimes we'll take over the loan. Maybe they've got a really good interest rate that they
Yeah.
got 3 years ago, and we'll take over those loans. And that's what's really allowed us to continue to grow over the last couple of years.
Yeah, that's a good point. Thanks for throwing that in. Do you do any DSCR or something like that?
Yep, and we're still doing some DSCR loans too. But I'll be honest with you, it's like got to find a really screaming good cash deal to do cash deals, and we still do them, right? But right now, and honestly, I think it helps us underwrite and be more conservative. We're like, hey, we're going to be really low on our cash prices just to be conservative in a high interest rate market, right? But we'll always give them terms because if we can make it cash flow and we can get into the deal with lower money down, I mean, that's actually how I bought my latest primary residence, right? I was able to get into my family's dream home by working with a seller who owned it free and clear and working out the terms. And because it's cool how you create so many win-wins in these situations to where, because there's a lot of times with multifamily, that seller might not want to take all the money right now because of capital gains. And then you could structure something that's truly win-win for both sides.
I mean, what Casey was just describing is mainly related to how long does somebody have ownership of a property. If they bought something 3 years ago, yes, it appreciated, but it's not that. It can be pretty substantial, but compared to something that somebody owned 10 years or 15 years, which doesn't make it an old house or old property. But if you look at that kind of deal and how much appreciation in the residential market we had in the last 10 or 15 years, basically since 2010, right? Approaching
Mm-hmm.
now 15 years. So then you have that mountain of equity. Now, on the other hand, I always have to say, if it's a primary residence that you're buying and still have the benefit of not having to have capital gains right away. I
Yep.
think as a couple, you can get like 550 or so in capital gains before you even start having to pay taxes. But if you have the situation, and I always caution our clients, and I'm sure you do this too, Casey, to really think hard about, do you ever turn a property that you occupied yourself into an investment property? Because it is a huge difference, right? Unless you want to do 1031, and it's not always necessarily a really good opportunity. But if you have one that has several $100,000 of equity in it that you could easily take if you just have it as your basically primary residence or even a secondary, versus an investment property where the only way to get around it is to exchange it. Those are some of the more in-depth. I think we need to be careful that we don't go down that rabbit hole. But
Yeah.
those are the deals. Fundamentally, I would like to ask you if you want to summarize really quick, what kind of deals does your organization, Bighorn Capital, and kind of the other parts that you have offer, and how can people get in touch?
So, I mean, back to that point, we're talking. We try to, like, if I'm looking for a multifamily, I want to really speak to people who have owned it for a while. They're like they're legacy owners. They've owned it for a while. They maybe built in the '70s. They've got a lot of, as you were just talking about, actually, they bought it at this price. Now it's worth this price, right? So they're going to take that big gain, and we're going to spread it out over time, which is beneficial to us. And plus, a lot of times too, and to kind of explain what we look for is these properties haven't been repaired. And I guess the last thing I didn't tell you guys is in I live in Houston, Texas today, right? And I invest in Wyoming. But the reason I do that is because it's Houston and Texas is so sophisticated when it comes to multifamily and real estate investors. But Wyoming, much less sophistication, much less people doing this. And again, even if they wanted to do it, there's no contractors. So it's kind of this perfect blend for the last several deals we've done to where we buy something that needs a bunch of work and there's not really somebody that can really professionally manage it. So when we can bring in all three of those, again, find the deal, fix it up, and properly manage it, we're just creating so much value for myself in our company and for the fund and for these limited partners who can come in and buy these assets. Because again, we looking at multifamily across the country, can be very competitive, right? But we're just finding better deals. So yeah, I would encourage anybody who's interested in getting into multifamily, or even if they just like doing, because the multifamily is a great long-term wealth one, and we're always looking for limited partners there through Bighorn Capital Fund. But I would also encourage anybody who's like, you know what, I want to do something more short-term and make more money, maybe than I'm making in a savings account, but not have the volatility of the stock market. We love working with people like that because we'll use that capital on our fix and flips and on our deals that kind of turn over more frequently. So basically two kind of different structures or two different ways you can invest with us. And also too, if anybody's ever like just wants to own the property outright and buy a turnkey, we're always happy to find it. Again, we're finding deals, we're fixing up and renting them out. And I would love to keep every one of them. My downfall is I tend to keep too many of them. So we're always happy to find people that just want to own the property themselves, want to be a real estate investor themselves and kind of get their hands a little dirty. So we love working with people like that too.
And we do too. And I guess my advice to you would be just consider managing it the same like keeping it.
Yeah.
So you manage some that you own the title and others that you don't own the title, but they're still in your portfolio, right, in a way. So
Yeah.
that's really cool. Yeah, thank you for explaining this. One of my lessons learned listening to you, Casey, is that there is obviously a benefit of a smaller market. Oftentimes people quickly go and say, okay, well, shouldn't I be in a bigger market with more stuff? But I would suspect part of the reason that you don't have that many competitors in the construction trades is just because the market isn't so big. So if somebody like you comes along and says, I can give you dependable work, basically consistently, and not just every once in a while, well, then you're already differentiated. If you were to do this in Houston and you don't, for whatever reason, tell them the right thing or don't pay them the top dollar or stuff, there are like 100 others that they can go to, or even open their own shop, right? And then charge you like, appearance fees and a fee for this and another fee for that. So yeah, I think there is a benefit of having a market that is not as sophisticated, not as deeply developed, and not as huge.
That's 100% right.
Yeah. Okay, cool.
Yeah.
Yeah, thank you so much, Casey. One last thing, after we talked about all this real estate stuff, I always like to ask one or two questions unrelated. And I think the interesting one would be to ask you, if you could meet anybody, who would it be and why?
Might be a predictable one, but I would love to meet President Trump, just because he built his empire through real estate, and just get to see what he's seen. And I think he does really good at marketing, and a lot of that. So again, I don't agree with everything he does, but I think it'd be fascinating to meet him and be able to pick his brain on how he's built what he's built and done what he's done.
It's actually the kind of halfway sentence you said in between. Honestly, I know a lot of people since I'm old. It just comes with the territory. I don't know anybody where I could really clearly, honestly say I totally agree with everything that person has ever said, done, or is known for. I haven't found any, to be honest. And if you realize that, then I would encourage people in 2025 to stop throwing in those qualifiers.
That's a great point. I love that.
Okay, cool. Well, Casey, it was a great pleasure. Sorry for the little hiccup there at the beginning with the technology, but we figured it out. I'm very grateful. And hopefully we can do it again at some point, and maybe we even work together.
Yeah, yeah. The one thing I didn't mention was if people are, you mentioned like where could people get a hold of me? If you just go to my website, CaseyGregersen.com, you can connect with me or any social media channel, just search my name. But one thing I would love, so my passion is helping people. Like I worked in oil and gas and I spent my whole career, there working in that like up and down economy and layoffs and just volatility, right? And a lot of people who just didn't get to see their families, right? And then I went through that. So I've built my passive investing playbook, which you can find on our website, and it's free. People can go check it out. But I just want to be able to teach people some of the tools, just like you do, Axel, like help people, whether it's buying turnkey or investing in a fund, or maybe they want to fix and flip. But I wanted to pack all the stuff I've learned in 14 years into that vault. And I played college football, so I love football. So anyway, we call it our passive investing playbook, if anybody's interested.
That's very cool. And thank you for giving that to the audience. And we will put everything like, the website and the email and those kind of things in the show notes, so you can find it there. All right, cool. Well, Casey, thank you again. And like I said, maybe we can do it again in the future.
I'd love to. Thank you, Axel.
All right. Thanks.